Welcome to EdgeStocks.com. My name is Rob. Thank you for joining me. I'd like to go over the trades for March 12th, 2010. The first stock on our list is Apple, and at the 100% win level, Apple is the number 2 trade for Apple for the year for 312, and Apple has been in a really strong run-up here. They gapped up after releasing some news about the release of the iPad product a few days ago, and it's been in a strong run-up on pretty strong volume. I'm often opposed to buying stocks at new highs because it's often lower risk to have the trade come up inside of a trading range where the target return, in this case 8%, 8.5% or so, can be met without having to go out to new highs. So these trades are often, in my opinion, a little bit higher risk, but there's nothing to say that the stocks won't go higher as well. Apple is a $224 stock today, and therefore it's also a little bit more difficult to balance your portfolio when you have stocks that expensive, although you could do odd lots on it as well. So let's move on to the next one, symbol THC, Tenet Healthcare. I like this stock. It's at the $5 range, makes it easy to buy. And also I've got the whole healthcare sector coming on a buy right along in here. So Tenet Healthcare has been in consolidation for the last number of days, and our target on this symbol is about 7.5%. And so it would be very easy to attain that average level on this particular symbol. So there are some good things going here. Next symbol is WDFC, WD40. And this stock has been also had some strong upside after touching the 200 period moving average. It's been in consolidation for the last few days after testing a high area up in here. This is probably a pretty good risk scenario for this stock. This is also actually a fairly short term trade. It only goes out to the 25th of the month. Our next stock on the list and our final one for the day is symbol WWW, Wolverine Worldwide. The stock has been in a strong uptrend going back into last year, and it came down and touched its 200 period moving average. Looks like it had a huge sell-off right there, and then came back stronger than ever to come out to new highs. Again, as I had said with Apple, we are at new highs. You know, a stock that's only 8% of the cost of the Apple stock, but I usually like to see a little bit of consolidation. So there's some various strategies you can use to deal with these things. You can buy odd lots on higher priced stocks. You can buy evenly across the portfolio. You can wait for a dip, these kinds of things. A lot of times I get burned. I'll place a limit order to get in on the open, and then I don't get filled, and those are usually the best ones out of the lot. I'll get filled on the ones that don't return as much, and I won't get filled on the ones that do return. I had one the other day. I didn't like the chart pattern because it was playing with new highs, and that one broke out, gapped up the next day. It gapped up 50%. It was a biotech stock. So, you never really know which ones are going to pan out and be the best. So that's what I have today. Thank you for joining me, and hope to see you again real soon.